Hi, I'm Mehdi Sunderji, and welcome to Your Finance TV's Crypto Revolution, covering all things crypto and digital assets. We're here with Adam Blumber, co-founder at Interactis. Adam, how are you, mate?
I'm doing all right, Mehdi. I'm in a new city, but crypto has been raging for the last couple of weeks, and I'm glad that we finally get to sit down and talk about it.
It seems like we've had a 20% bump in Bitcoin since our last show.
It is. I mean, it makes me go, maybe I don't talk to Mehdi for so long. Maybe we take 2 weeks off, but I don't want to do that. I like chatting with you, and I like getting this information out.
I do as well, but maybe let's chat in 6 months and we'll see, Bitcoin doubled.
But you know what? We'll talk about it today, but there's a decent chance of that.
Oops, yeah, let's not get into there yet. Before we dive right in, don't forget to like and subscribe if you want to stay on top of our content. And always feel free to drop us a line if you want us to talk about anything other than Bitcoin and crypto assets, but we probably won't listen to you. But lots to talk about. Let's dive right in. One of the biggest catalysts in the last several days for this move up in Bitcoin has obviously been the Blackrock filing for a spot ETF. So, Adam, why is this any different from anyone else filing?
Well, because it's BlackRock. That's
There we are.
we don't
End of
need
the
to say
show.
anything else.
We're done.
Yeah, there's a whole lot that goes into because it's BlackRock, right? But that's the main reason. So up until this point, you've had, the likes of crypto companies, Grayscale, Bitwise, Valkyrie filing for ETFs. You've had Wisdom Tree, which is a traditional finance company filing for an ETF, right? But no one quite carries the weight of BlackRock, multi-trillion-dollar asset manager, largest asset manager in the world. What it is, there's something like, I forget the exact number, 530 something and one in terms of getting ETFs approved. So they have a little bit of weight. And the interesting thing is, if we go back, we see BlackRock was highly against crypto several years ago and is now filing for a Bitcoin ETF. You and I have talked about how BlackRock has discussed the idea of real world assets on chain, of tokenized securities, of tokenized assets, and the benefits of having blockchain based or blockchain based accounting for assets, for real world assets, for real estate, for private investments, for public investments. So now BlackRock is going, we think there should be a Bitcoin ETF, and here's how we want to do it.
And so now we've got BlackRock has filed, right? That's great. We've got the big daddy in the room, and now it's bringing a lot of obviously attention back to Bitcoin. We've seen that move up in crypto prices. This is being attributed, largely to the application by BlackRock. But
of course. Well, keep in mind, Mehdi, for the last few weeks that you and I were talking, for the last few months you and I were talking, we were so down on regulation on crypto and Bitcoin regulation in the US, right? We didn't think there'd ever be a spot ETF approved. We thought that the SEC is trying to basically eradicate crypto from the US. Anything they can. Gary Gensler was just saying basically everything is a security. We don't want it. We don't want ETFs. It's not safe. And the likes of Elizabeth Warren and such saying it's only for criminals. BlackRock just adds something. And what they add, in addition to being the largest asset manager in the world, is there is no way they're going to file this application unless they know something or they know they can influence something, right? So one of those two things. One is they either know that they can get it approved because they've already done the deal. They've already worked things with Gensler, with the SEC, or with maybe someone above him to say, look, either this guy's going to approve our ETF because we don't get ETFs not approved, or you're going to replace him. Okay, those are the kind of deals that I feel like either have to be worked or the kind of political leanings that they're going to use. They're going to use their muscle to get this approved.
So I completely agree with you on that front. My question to you is, outside of it being BlackRock and the credibility and everything that they bring with them to the table, is there any difference in the actual filing versus historical filings by other people?
Well, from what I understand, and I'm not a securities lawyer, they have made some changes to how they're going to structure some of the risk, some of the exchange, some of the liquidity that is available there. So they have made a few changes to the filings in the past. And again, that's where I say maybe they know something. Maybe they have already worked the deal with the SEC to say, look, if we make these changes, you're going to approve it. We're going to make these changes that others, against what others have done in their spot ETF applications. We're going to make some of these changes to liquidity, to risk, to whatever else they need to do so that it will be approved. And what we've also seen is the likes of Valkyrie and Wisdom Tree have gone back and reapplied, but they're using the same language that BlackRock is using now. Because, of course, these are public filings, so they can just go grab the language and do the same thing.
So it feels like a cut and paste of BlackRock's application, and off we go.
That's exactly what they're doing. And you have to feel, Mehdi, like because of this, whereas in the past we've said, look, there won't be a spot ETF for maybe a year or two. Now you got to think that it's going to happen within the next few months. You got to think it's 3 or 4 months away because, again, BlackRock isn't going to stick their neck out there without knowing what's going to happen. They don't do things on a whim. The other thing to notice, Mehdi, is we're in this bear market. So it's not like BlackRock is jumping in some sort of FOMO move. Like we want to be a part of this if everyone else is. They waited until there's a bear market. They waited until they can get this in there. They can, kind of be the 400-pound gorilla, the 800-pound gorilla, sorry, probably the 2,000-pound gorilla. If we want to keep going up there. That's how big they are. They wanted to wait for that even in a bear market. And that is what has brought the price up. Because, of course, if the spot ETF gets approved, as we go back to the beginning of our conversation here, we could very well see a doubling in Bitcoin prices almost that day, because the amount of Bitcoin that would have to be purchased by BlackRock and by all these other ETF, by all these other companies that submitted almost the exact same ETF application that would have to be approved, the amount of Bitcoin they would have to purchase would just be astronomical. And remember, there's only ever going to be 21 million Bitcoin, so the price would skyrocket.
So alongside the BlackRock ETF application and such, we've seen another big launch, which has been the EDX Markets, which is a crypto exchange backed by, again, more traditional finance big boys, Citadel, Fidelity, and Schwab. They're doing things a little bit differently from other exchanges. They're not offering custodial services. So I've got a couple of questions for you. Why is this a cleaner model? I guess that's slightly obvious, but how will it all work for the institutional investor?
Well, the reason why it's a cleaner model, because so the SEC, going back to our friends at the SEC, right? The SEC last year and now this year has created something around digital assets. Well, it's kind of aimed at digital assets. It's aimed at crypto, but this idea of this new custody rule. And basically, the SEC is not very happy with the likes of Coinbase, Gemini, Kraken, and such to say, you're the custodian and you're the exchange. We don't like that, because at some point there's a commingling of funds, right? If I have my account at Coinbase and I go to trade, or even if I just have, self-custody funds, when I go to trade, my Bitcoin gets commingled with everybody else's in the pool to trade. If we look at traditional assets, my assets might be held at Schwab, but when I go to trade, it goes through NASDAQ or it goes through the New York Stock Exchange. That's the exchange. So when you're talking about the new exchange that was launched, they're saying, look, we're not going to custody anyone's assets, but we're going to provide that exchange such that we can separate custody from exchange. And that seems to be something that the regulators in the SEC want to see is the separation there, the church and state separation. This is the custody and exchange separation that we see in traditional finance. They want to bring that over to crypto. And honestly, it kind of makes sense. It makes sense to go with that model, having the exchange or the custody where I hold my assets separately from where I might trade my assets.
And again, it feels like another BlackRock situation where you've got these big boys, the Citadels, Fidelity, Schwab, who basically probably sat down in a room with regulators and said, listen, how do we do this in a clean model where you're not going to get your knickers in a twist? And it seems logical to remove the custodial aspect from the exchange aspect. And I hate to say it, but it's kind of working for our interests with the introduction of these traditional financial guys sticking their oars into the DeFi world, right? So,
right,
like it or not, they're helping the process go further. It doesn't probably help for DeFi-centric mindsets and the true kind of core of what this is supposed to be, but it's helping it progress.
Right. It is definitely, well, what it's doing is it's helping the price go up. It's helping get more interest. from my perspective, I hope it gets more people to learn about it, right? I hope this is not where it ends. I hope it's not, all right, everyone has Bitcoin, but they have it custodied at BlackRock, or they have it custodied with an ETF, and they're trading on this weird exchange, started by Schwab and Citadel. That's where I hope it doesn't end. I hope we do move more towards this, blockchain-based ledger where we're keeping track of things on a public ledger, on a public blockchain, public network. But I think this is a necessary step. And if I want to create an analogy, Mehdi, you and I are both old enough to remember the internet days when the quote internet was, I would log into CompuServe or AOL or something like that, and I wasn't subject to the World Wide Web of everyone, integrating. It was, I could use their chat rooms and I could use their email and only send email to people who were on their service. And I could only use the services that they offered. Now, of course, eventually we got to this World Wide Web where I get a new computer and I pop it open and bam, I'm on the internet and I'm doing anything I want to do. Same with my smartphone. That's where we're going to get to. This is kind of, in my mind, the CompuServe, Prodigy, AOL days, where we're still keeping it very sandboxed. And I think we're going to look back on these days as that, whereas we know that CompuServe and AOL and Prodigy got so many people to experiment with the internet, right? To get on there the first time, to do that weird squeaky sound when you connect to your phone line and log in, and it's really slow, but you learned what it was like to chat with people all over the world if you wanted to. Unfortunately, you also learned what it was like to chat with people all over the world, right? They're good and bad to that. That's where we're right. And that's where I hope we're going to go, is people are going to go, oh, well, now that I have Bitcoin, now that I have ETH and I see what's happening to the price, now I'm going to investigate further and see what happens when I actually custody my own assets, when I actually participate in decentralized finance, when I actually, own a non-fungible token that represents a private investment. Now I get to see what that looks like, and we're going to move in that direction.
Hopefully it's just like a gateway to the DeFi world. But it's a very realistic and concern that it does just sit in that TradFi kind of universe versus what it's really supposed to be. But we'll always keep an eye on all these things.
Right.
A name that's been popping up more and more is Fidelity. I also mentioned that they're behind or involved with EDX Markets. There's also some more rumors around them, right? They're now being rumored to potentially buy Grayscale or file for their own ETF, Bitcoin ETF. Do you think any of this is realistic? Or do you think this would be, this is just another jump on the bandwagon and helps the price of Bitcoin, basically?
Right. Well, look, I think a whole bunch of people are going to jump in here because why not? Like there's going to be so much interest and so much money. I mean, you remember a couple of years ago when there was a Bitcoin spot ETF launched in Canada, and it was, I think, the largest single day investment in an ETF ever. And so that same thing is going to happen, especially when you see the price fly up like it's going to. Everyone's going to want to get in on it. Something else interesting that you and I haven't talked about, Mehdi, that Fidelity is doing is they very quietly launched this crypto for wealth managers, which obviously kind of is where I sit, right? Is they've launched this ability for wealth managers, for financial advisors to utilize Fidelity in their Fidelity digital asset service, which is, Fidelity has been custodying Bitcoin and now ETH for several years. And now they're launching a service that says an advisor can set up accounts for clients. They can trade for clients. It'll feed into the same reporting that they use for their Fidelity traditional services. So they kind of very quietly did that. They didn't make a big announcement. It was just kind of hidden in there. But bam, financial advisors now can use Fidelity, a name they know, to really custody digital assets, to set up accounts for clients, to report on them, to bill on them, all of those things. So yeah, Fidelity, BlackRock, Schwab, all jumping in, which is a little painful for me, right? I'm a little bit of a crypto purist, and I go, man, like the regulators were holding up all the crypto companies, and now all the TradFi companies have taken their time and they're jumping in. I don't want to see crypto be Fidelity, BlackRock, Schwab.
That's exactly what it should be.
Right.
So, aside from the spot ETF, we've obviously have futures ETFs and Bitcoin, which have been trading. There's now we can't get the spot ETF approved, but the volatility shares has just launched a two times levered Bitcoin futures ETF. So can we just remind the viewers why this is allowed versus the cash ETF?
Uh, sure. So from what I understand, again, I'm not a securities lawyer, so I've had to talk to others. Futures ETFs are allowed because they go through a different process with the Securities and Exchange Commission, because they're piggybacking on futures markets, which are governed by the CFTC, right? So they're basically settling futures. So they're basically just trading derivatives that have already been approved. Right now, whether or not it's a Bitcoin derivative or a real estate derivative or an interest rate derivative, it doesn't matter. You're allowed to file for those. And the difference here is, again, from my understanding, is if you are filing an ETF that is a spot asset ETF, you're filing it and it has to get approved by the SEC. If you're filing for a futures ETF based on derivatives, you file it and it has to, if it's not denied by the SEC, it is approved. Right. So that's a big part of the difference here is for the SEC to have denied it, they have to have a very good reason to deny it, versus with the spot ETFs, they have to have a very good reason to approve it.
That's a very interesting differentiation. It just sounds crazy that we're getting a 2x levered in this, and we can't get a spot one approved. But
Can't get a spot ETF, but I think this is where a little bit of the SEC, and again, going back to the regulation and why it works this way, is they kind of throw it over the fence to the CFTC and says, look, the derivatives are your things. If this messes up, it's kind of on you, right? It's going to go back to the derivatives market. So all we did was approve an ETF based on derivatives that you've already made available.
So I feel like this has been a conversation around macro and regulations only. So we're kind of like staying in this regulatory conversation, but just hopping the pond to the UK, excuse me, who seem to be making a bit more headway in their regulatory architecture. What day is today? It's Wednesday. On Monday, the FSMB in the UK, the Financial Services and Markets Bill, approved crypto as a regulated activity and stablecoins as a means of payment under existing laws. This is a real big positive for trading crypto in the UK, right? This is we're basically getting structure. There's approval. There's the
Right.
UK is doing right things to try and become that headquarters of crypto.
Right. And this is a big thing. And if we go back to the conversation we've already had, this but this rule potentially, but this law, this regulation, by the way, which is not passed yet, right? It moved through I think the House of Lords.
Yeah.
It has to get kicked back to the House of Commons, back and forth till they approve it, and then it goes to the King to sign. So it has not been, completely put into law yet. But it's not just Medi that they're saying, okay, Bitcoin is okay and ETH is okay. What they're saying is stable coins are okay for payment. What they're saying, this infrastructure is good with us. We're putting regulations in place to say people are going to be able to use the infrastructure, the stable coins as payments, potentially decentralized finance. They're giving the rails to be able to do that. If we go back to the talks we've already had, the Bitcoin spot ETF, that is just giving you and I the ability to buy and hold Bitcoin and hope it goes up in price. That has nothing to do with whether or not anyone uses the infrastructure. It has nothing to do with whether or not anyone uses USDC or DAI or Tether or anything to make payments on a system that is not a banking system. What the UK is doing, which the EU has already started to do, which Dubai has already started, which Singapore and Hong Kong have already started, is saying, look, the infrastructure, this ecosystem is viable. And we need to start putting regulations in place so that I can pay you using crypto, where it doesn't necessarily have to go through the banking system. I can pay you in DAI or USDC or something that looks like a dollar or something that looks like a euro or a pound without having to ask the bank's permission to do that. And that's what they're doing in the UK. And to me, that is actually much more exciting overall than a Bitcoin spot ETF.
And just to clarify, that's not necessarily saying that they accept crypto as a currency backed by the British government. It's basically saying that they're approving crypto as a regulated activity for basically transactional use, such. But it's not like, which was one of the concerns in the US, where every dollar is backed by the full faith of the government or Treasury. That's not what they're saying.
I believe that's not what they're saying.
Yes.
I don't think they're saying, sure, all of you, you can use a digital euro or a digital dollar, go pay for whatever you want. We don't need banks anymore. I think they're just providing the rails to say, we're okay with going down this road. We're okay with, some of our institutions regulating it, so that you can eventually use it, so that this can eventually be a payment rail. This can eventually be a financial rail for us. That's my understanding of what's happening. They're not blessing it and saying, we totally back this thing. They're saying it's viable. It's not going away. We might as well put some regulation around it.
Perfect. And that's how the US should be looking at it. No one's saying endorse it, bless it, do whatever you want with it. Just have some structure around it. So good for the
Exactly.
UK. I guess I'll call it my alma mater.
You have so many alma maters, Mehdi. Like you claim everybody.
I am. I'm a man of the people. What do you want me to say?
Yeah, you're Mehdi the melting pot.
And okay, so last one. We've got the IMF, another regulatory conversation almost. So the IMF had come out in February with some of their members were basically looking at outright banning, that's saying that they should outright ban crypto, or it certainly shouldn't be ruled out. They've now come out and seem to be reversing their thoughts and saying that banning crypto assets may not be effective in the long term. So this is again, we're starting to get buy-in from some of these bodies that have influence on the regulators or have some pseudo influence on the regulators, starting to buy into it, and not necessarily buy into it, just not necessarily poo-poo it.
Exactly. They're saying, look, an outright ban is probably a bad idea. And maybe they're realizing some people in the world need this, right? And if some people in the world need it and it's effective for them, you look at situations like Turkey, you look at situations like Argentina, Venezuela, Brazil, all these places in the world, Russia even, where people really need to utilize the crypto rails. It's not like they need to buy Bitcoin and hold it and hope it goes up, not necessarily speculate, but they need to use the system, just like we just talked about with the UK, realizing we need it for payments. There are places in the world where people need this. And maybe the IMF is realizing that's possible and that's necessary. This system has been built. People are going to use it regardless. And what that means is you and I here in the US cannot be an island from that. So the IMF is saying, look, outright banning it for any country probably is going to be a bad thing because people are going to use it. And if you outright ban it, you're going to make yourself this kind of financial island.
Adam, I feel like we've covered a ton of stuff today, and we could keep going, but unfortunately, we've hit the half-hour mark, and we have to call it. But as always, I love talking crypto assets with you, and thank you for sharing your time.
Yeah, it's great, Mehdi. Enjoy. Glad to be back after a little hiatus, and look forward to whatever the next week brings.
Oh, there'll be something, I'm sure. And of course, I want to urge our viewers, don't forget to check out Adam's course on digital assets and crypto education. You can see it right behind his head there, Interaxis. Go check it out. And of course, don't forget to check out and subscribe and like Your Finance TV. Until next time, good luck investing.